environmental, social, and government issues. Broadly speaking, you said Asia is lagging a bit. How is it growing, and what is the dynamic that's pushing it forward in the region?
Good day to you. That's a very good question. So Asia-Pacific has actually made a lot of progress in terms of integrating ESG factors into investment analysis. We see that there are three key centers of activity: Japan, Australia, and New Zealand. But outside of those three key centers, we are seeing a huge amount of interest in investing according to ESG principles. And you've got to realize that Asia is very coastal. Populations and assets are located in areas that are extremely vulnerable to climate change. And investors realize that if they do not consider the resilience of their supply chain, their markets, or their operations, then they're doing themselves a disservice.
So can they afford to make these kind of changes? In a way, you would say, well, they can't afford not to make them because they're so vulnerable. But particularly in developing countries where they're really seeming to be more and more taking the lead, it seems that they feel they can. What is the difference for them in terms of what they're doing and what their returns are, et cetera?
A key driver when we speak to our charter holders and members around the region, the most significant driver of doing this is risk management. If you look at the World Economic Forum survey, year after year they produce a risk assessment survey, and things such as environmental disasters, extreme weather events, and water crises have supplanted things like economic risks as the concerns that people most worry about. From an issuer's perspective, if they want to open themselves up to international capital, these are exactly the issues that international investors are contending with, and they need to be able to show that they have a strategy to cope with that. They need to be able to show that their strategy is aligned with the operation and be able to manage some of these sustainability issues in an effective way.
You mentioned in your report that for a lot of companies, ESG is a box-ticking exercise, and sometimes a costly and a burdensome one as that. Is part of the problem that ESG appears on the balance sheet as a cost. It's not viewed as having a long-term benefit. For a lot of issuers, they're doing things for a number of different reasons. And the three key reasons that I see are as follows: because the regulators demand it, because it's good for business, and because it's the right thing to do. So for a lot of the issuers who are doing it because the regulators tell them to, yes, then it becomes a box-ticking compliance exercise. And I think each one of us in the industry has a role to play here. If we can communicate with the issuers that, look, by doing this properly, you can diversify your capital base, you're signaling to the market that you have this under control, it's good for business, it's also good for the communities that you are operating in, then I think it becomes a win-win-win proposition, and it will stop being just a compliance or box-ticking exercise. Now, you identify Thailand as an emerging regional leader in ESG disclosure. Can you describe what's happening there? Thailand is a very interesting case. In one of the measures that we looked at, it was the only Asia-Pacific stock exchange that made it to a top 10 of a ranking in the ESG disclosure index. And the reason why Thailand has been very successful in a very short space of time is that the stock exchange worked very closely with the issuers, providing them with the guidance that they needed to upgrade their disclosures. They also were able to motivate the issuers into thinking that sustainability reporting is a benefit and not a burden. So some of the largest Thai companies have been admitted to the Dow Jones Sustainability Indices, which is a boon for the market.
How about China? What is the dynamic there? What is driving it? What sort of obstacles they have? For a lot of people, the disclosures they have to do are, I think, sometimes at the outset are seen as burdensome. Right. China is also a very interesting case study. The CSRC had decided, announced a couple of years back that they will mandate environmental disclosures by listed issuers in 2020. So a lot of work is going on on that front. And from
On a China perspective, it's a policy-driven exercise. So as we all know, the central government is very keen to combat pollution. So they are very keen to get the environment part right. And all the listed issuers will have compliance requirements going forward in terms of environmental disclosures. Now, obviously, the actual guidelines still remain to be seen, but we are hoping that what is happening in China will have a trickle-down effect for the rest of Asia.
You know, at the IMF meetings just last month, I moderated a World Bank Bloomberg panel on green bonds, and one of the people on the investment side said, you know, to a large extent now, it's demand from investors that's starting to drive the issuers to do more of this because so many people want to include that in their clients' portfolios. Are you seeing that in Asia?
Absolutely. So again, I break it down to three things, right? Regulators want you to do something, your investors, your clients want you to do something where it's the right thing to do. So I think it's much more powerful if it comes from investors and asset owners because, you know, look, people in the Asia Pacific are very pragmatic. They follow the money. If their clients want them to do it, if their capital providers want them to do it, they will do it.